Welcome to The Explainer. Today, we're going to pull back the curtain on some of the biggest names in investing.
So, who's the best investor to follow? I mean, if you're in the investing world at all, you're constantly told, right? Study the greats, follow their every move. But is that actually good advice?
You hear their names all the time. Buffett, Burry, Wood. It's like they're the rock stars of the stock market. And we're told to just copy what they do. But the thing is, the legends we hear, they often hide what the actual data is telling us.
But what if those legends aren't the whole story? Well, that's what we're going to dig into. We're going to look at the numbers, dive right into their real-life portfolios, and uncover the reality behind the myth. And trust me, some of what we find might really surprise you.
All right, first up, the Oracle of Omaha himself, Warren Buffett. Let's talk about the myth of the simple buy and hold genius.
Okay, first, just to set the stage, look at this number, $351 billion. That is the size of his public portfolio. I mean, that's bigger than the entire economy of some countries. It's just a mind-boggling amount of money.
But here's where it gets really interesting. All that cash, it's invested in just 37 stocks. 37! For that amount of money, that is an insanely concentrated portfolio. You just don't see that kind of focus at this scale. And this chart just lays it all out there. Look at that. Over half, 50% of his entire public portfolio is in one single company, Apple. Then you've got a few other big names like Bank of America and Coca-Cola. But wow, that Apple slice is just massive.
So really, think about this. Without that single bet on Apple, Warren Buffett as we know him today, well, he just wouldn't be the same. His modern legend is almost entirely built on this one single incredible investment. You take Apple away and the whole picture changes dramatically.
And yeah, he's famous for holding stocks forever, right? I mean, he bought into American Express and Coke way back in 2012, and he's still holding them today. Just think about that for a second. Could you hold a stock for over a decade, through all the ups and downs, without hitting that sell button? It's way harder than it sounds.
So, can you replicate his strategy? Well, the truth is, probably not. I mean, the guy started investing when he was 14 with what's basically 90 grand in today's money. He's had a 78-year career for that to grow. He has access to unbelievable amounts of capital, and he's been investing in a U.S. market that's just been on a tear for decades. These are really unique conditions that the average person just can't copy.
Okay, so if holding forever is so incredibly hard, what about the total opposite? Trying to predict the big crashes? Well, that leads us to a whole different kind of legend.
Let's talk about Michael Burry, the prophet of doom. This is the guy who got famous from The Big Short, right? He's the man who saw the 2008 crash coming when nobody else did. The myth is that he can always see what's next.
But check this out. In 2023, his portfolio was down 30%. 30! At the same time, the S&P 500 was up over 24%. That is a massive, massive miss.
And if you look at his portfolio, it's just a portfolio of extremes. He'll hit these absolute grand slams, like a 362% return on GameStop, but then he'll have these absolutely devastating strikeouts, like losing 87% on another stock. It's a real go big or go home strategy.
And that's the real lesson here. Burry's legend isn't about being right all the time, not even close. It's about being spectacularly, life-changingly right just a few times. It just goes to show you, sometimes one or two massive successful trades is all it takes to build a career. All right, let's pivot to our next investor, Cathie Wood. Her whole thing is being the futurist, right? The myth is that she has this golden touch for picking the next big thing in disruptive tech. But this chart shows the big problem with that approach. You can be right about the company, but wrong about the timing. Take Coinbase in 2023. The stock itself shot up over 300%, a huge win. But because her fund was trading in and out, they only captured about 8.8% of that gain. That's leaving a ton of money on the table.
And then there's the other side of it. When things go wrong, a failure to manage that risk can be absolutely brutal. I mean, some of these investments have gone to zero, a complete 100% loss. That's a tough pill to swallow.
So the lesson from Cathie Wood is pretty clear. Having amazing research and a great idea, it's just not enough. You can still lose a ton of money if you don't get the risk management and the market timing right. Those things are absolutely critical.
So, if these superstar models all have these big flaws, is there another way? Let's talk about an alternative growth strategy,
Looking at some folks you might not know as well but who are super successful, the pragmatists. These guys, like Fisher and Gifford, have a different approach to growth. See, Buffett is all about buy and hold. These guys, their philosophy is more like buy, hold, and manage. And that last word makes all the difference.
And their strategy with NVIDIA is just a perfect example. Bailey Gifford started buying it way back in 2016. But here's the key. When the stock went on a tear, they weren't afraid to sell some shares and take profits. They sold some in 2021 and then another chunk in 2023. They're still a huge holder, but they actively manage the position and lock in those gains. It's smart. Okay, so we've looked at all these different styles. What's the real lesson here? How do you find your own investor style?
Look, the goal isn't to just pick a legend and copy them. That's not going to work. As we've seen, their stories are way more complicated than the headlines. The real goal is to learn from everything, their huge successes and their big failures. It's about taking those lessons and building your own strategy. So, the real question is, what's yours going to be?